Let's stick with the Fed now and bring in Randy Kroszner. He's a former Federal Reserve governor, and he's now an economics professor and deputy dean at the University of Chicago's Booth School of Business. He joins us on the phone this morning. Randy, good to have you here. You just heard what our Fed correspondent Brian Cheung had to say in his preview. Do you expect to hear a more hawkish Jay Powell today, or do you think he's going to continue with his dovish stance?
Well, I think he's going to continue exactly the way that he has been going. I'm saying there's an enormous amount of uncertainty. I don't think he's going to say that the positive jobs report gives you an all clear sign to pull back. He's going to say it's one piece of data. Don't put too much focus on any one piece of data. And he knows that there are a lot of challenges going forward, so he's not going to pull back.
Hey, it's Brian Cheung here. So the summary of economic projections will be in view with the absence of any major policy announcement today. But it is a little bit of a tightrope. I think it was Chairman Powell who was saying a few weeks ago that you don't want to read too much into these economic forecasts when you're trying to predict the virality of something that monetary policymakers can't really predict, which is the virus itself. What do you expect to hear from Chairman Powell when the dot plots are released? And do you expect that the Federal Reserve might, kind of chain itself too much possibly to those forecasts?
So Fed chairs, whether it's following Bernanke, whether it's Jay or Janet, have never wanted to be chained to those dot plots. In some sense, those dot plots were very useful during Bernanke's time to be able to convey in a concrete way how to keep interest rates, or that interest rates be low for an extended period of time. But they, I think, became more confusing rather than helpful, because there are a lot of different views across the members of the Federal Open Market Committee. And so what you really want is a big dot for the chair, smaller dots for the vice chair and the head of the New York Fed, and then like one dot for everybody else. But each dot is created equal, and so that sometimes can sow confusion, because I think his view is the one that I just described, but my guess is you're going to have quite a variety of opinions. It's just so difficult to predict what's going on, so you're probably going to see a pretty wide variance there. And he'll just say, don't really focus on the dots themselves, basically listen to me, which is, we're going to be providing support for a long time going forward.
Randy, Brian Sozzi here. How do you think the market rally, the risk-on rally we've seen in markets, has overshot the likely economic rebound in 2021?
So it seems that there's a lot of optimism that the Fed can cure all ills. And they can't. They can't address the health issues of the pandemic. They can't repair broken supply chains. They can't respond to policies that lock people down. No matter how much stimulus they try to provide, if people can't go out, if they can't go to work and they can't go to the store, it's very difficult to stimulate consumption. So I think there's perhaps a little bit of a false analogy with what happened a decade ago when central banks did have the tools to try to respond to a financial crisis. This is not exactly a financial crisis. This is not a financial crisis. And I think the Fed and other central banks have been good in making sure that we don't, that this shock doesn't turn into one. But the Fed can't cure the challenges in the real economy when they're coming from something like a pandemic.
Randy, we know the central bank has already taken pretty drastic measures here to support the U.S. economy, even more than they did during the 2008 financial crisis. But in your view, do you believe they can and should do more? And what might that look like?
Well, they have done a lot. They've implemented the policies and set up the programs that we created while I was at the Fed back in 2008, 2009. And I think that's excellent. They did that very quickly. They started buying a lot of assets, and they really wanted to make sure that markets continued to function and that this shock didn't turn into a financial crisis. They have a number of programs like the Main Street Lending Program that really haven't gotten started yet. And so it'll be interesting to see how they implement those. And I think that's where we're going to see whether they do enough or not. I think they've been quite reluctant to get into the direct lending business, which certainly when I was at the Fed a decade ago, we were very reluctant and we did not get into that directly. So they're moving in very gingerly, but they may need to act more boldly on that. But fortunately, at least right now, the economy or the labor market seems to be steadying. But I do think that we're going to need more support through those lending programs when it comes to later summer and the fall, when a lot of these firms simply won't be able to reopen. The question will be called, and many of them will have to declare bankruptcy.
Randy, there seems to be this narrative coming back within some circles of Wall Street that a Joe Biden presidency would be bad for markets because of higher corporate tax rates. You were on the President's Council of Economic Advisors from 2001 to 2003. How would you advise a President Joe Biden on how to construct his tax policy so it's not so potentially deterrent to growth compared to what we saw from the Trump tax cuts?
So I think that's crucial. So the objective is growth and sort of good, balanced, sustainable growth, and that should be the key rather than just sort of narrowly trying to redistribute from this group to that group. You want to try to provide sustained and sustainable growth, and so that should be the crucial guiding principle, regardless of whether it's Republicans or Democrats. You can do other redistributive policies, but in terms of deciding whom to tax, you want to think about how do we generate or regenerate growth after this enormous shock that has come.
All right. Thanks so much, Randy. We appreciate your time this morning. And be sure to stay with Yahoo Finance. We're going to bring you the Fed decision and Jay Powell's news conference this afternoon, starting at 2 p.m. Eastern, right here on yahoofinance.com, as well as on our app.